Today in crypto. Major cryptocurrency exchange Coinbase has acquired the Routifier platform for enhanced trade execution. In a January 7 blog post, Routifier CEO Jason Victor announced that the team would now be developing its execution services for Coinbase, while thanking users for their support over the last 3 years. Continue reading on Cointelegraph. On New Year's Day, the US-based crypto exchange BitREX announced via Twitter that it was delisting 3 leading privacy coins, Monero, XMR, Zcash, ZEC, and Dash. A link promised further details, but those who followed it learned nothing to explain why trades in those tokens would end on January 15. Still, the news couldn't have been entirely surprising. Regulators, both in the United States and abroad, have been casting a gimlet eye at privacy coins these days. Unlike Bitcoin, BTC, and Ether, ETH, the coins promise enhanced anonymity by hiding users' addresses and transaction amounts, which make transactions more difficult to trace. Government agencies suspect they may be used for tax evasion, money laundering and perhaps other criminal activities. Continue reading on Cointelegraph. Can privacy coins be better managed to satisfy both law enforcement interests and those who like the greater anonymity they provide? On New Year's Day, the US-based crypto exchange BitREX announced via Twitter that it was delisting 3 leading privacy coins, Monero, XMR, Zcash, ZEC, and Dash. A link promised further details, but those who followed it learned nothing to explain why trades in those tokens would end on January 15. Still, the news couldn't have been entirely surprising. Regulators, both in the United States and abroad, have been casting a gimlet eye at privacy coins these days. Unlike Bitcoin, BTC, and Ether, ETH, the coins promise enhanced anonymity by hiding users' addresses and transaction amounts, which make transactions more difficult to trace. Government agencies suspect they may be used for tax evasion, money laundering and perhaps other criminal activities. The U.S. Treasury Department's Financial Crimes Enforcement Network, for instance, noted in its December 23 proposed rule change that anonymity-enhanced cryptocurrencies, or AECs, have a well-documented connection to illicit activity, having been used to launder bitcoins paid to the wallet used in the WannaCry ransomware attack, for instance. Moreover, elsewhere, the U.S. Internal Revenue Service announced in September that it would provide a bounty of up to $625,000 to anyone who could break Monero, the most widely used privacy coin, suggesting that the agency believes the coin may be used to hide taxable income. Timothy Massad, former chairman of the U.S. Commodity Futures Trading Commission and now a senior fellow at Harvard University's Kennedy School, told Cointelegraph, BitREX's action does not surprise me. He went on to clarify that the use of crypto for illegal purposes has been a top concern of law enforcement agencies and regulators in the U.S. and elsewhere, so a focus on privacy coins is to be expected. The scrutiny of the coins is not confined to the United States. In 2019, the South Korean unit of OKX delisted 5 privacy coins, including XMR, Dash and SEC, citing the G20's Financial Action Task Force's anti-money laundering rules, in particular, the need for the exchange to have an address for both the sender and recipient of a crypto transaction, which privacy coins do not provide. Japan, for its part, banned privacy coins in June 2018, referring to Monero, Zcash and Dash at that time as 3 anonymous siblings. But as is often the case with cryptocurrencies, things aren't as simple as they first appear. While acknowledging that many of regulators' concerns with privacy coins are valid, Jevons observed that the data still shows that Bitcoin, which is more traceable than cash, remains the currency of choice for criminals because of the ubiquity of off-ramps into fiat. Meanwhile, following the BitREX delisting, Dash's Twitter account unsurprisingly issued a defensive statement, noting, Dash's privacy functionality is no greater than Bitcoin's, making the label of privacy coin a misnomer for Dash. Others have suggested that the BitREX action might have been an effort to get in step with the FATF's anti-money laundering guidelines, or travel rule, and if so, other U.S. exchanges may soon do likewise. Andrew Miller, a professor at the University of Illinois and a board member at the Zcash Foundation, had doubts about this explanation, telling Cointelegraph, since Kraken, Gemini and other exchanges continued listing privacy coins, I don't think it's because of a specific regulatory requirement. When Cointelegraph contacted BitREx about its recent delistings, a spokesperson for the company said, BitREx does not have a comment for this story. It should be noted that BitREx US also delisted XRP on December 29, but that is likely down to the U.S. Securities and Exchange Commission filing charges against Ripple. Other commentators argue that there is not anything intrinsically problematic about privacy coins. Indeed, they are useful innovation, though perhaps they need to be managed better. There is nothing inherently wrong with privacy coins, said Givens, even if they make it easier to launder money than BTC. As noted, cash is easier to launder than Bitcoin. Yet no one is talking about eliminating cash, he suggested. Miller added that privacy coins, too, could be a counteragent for excessive monitoring of crypto markets on the part of authorities, including warrantless bulk surveillance. Julia Fonte, a professor at Carnegie Mellon University, told Cointelegraph, the global economy is moving towards a digital financial system that will enable fine-grained surveillance by governments and/or corporations. Privacy coins matter, among other reasons, as they signify innovation, Preston Byrne, a partner with law firm Anderson Kill, told Cointelegraph. Privacy coins are an important innovation not just in terms of incentivizing the development of new decentralized crypto systems but also in terms of the importance to society of having a confidential means of entering into transactions generally, a role currently filled by cash. Moreover, privacy coins may be less useful in hiding certain illicit activities than some regulators think, provided certain guardrails are in place, according to Byrne. Still, Givens believes that we should expect more exchanges in the US and globally to delist privacy coins in order to ensure compliance until they can deploy a risk-based approach to preventing money laundering. This may not help, though, said Byrne, in the long term. The explosive growth in so-called decentralized exchanges will likely pick up the slack, without the benefit to the government of having coins occasionally make contact with regulated touchpoints. These regulated touchpoints could indeed prove privacy coin's salvation. A custodial wallet operator, for instance, can generally see the transactions a user is executing and can still require the user to provide some form of identity, explained Fonte, adding, both Zcash and Monero also support a technology called View Keys that give an option to disclose information about a transaction to auditors or regulators in a secure manner. As Miller added, it's a common misconception that privacy coins fundamentally undermine or are incompatible with the existing way regulations are applied, a sentiment voiced on social media, suggesting that privacy coins are more about personal freedom than money laundering. On January 7, it was announced that a crypto custodian will issue wrapped Monero on the Ethereum network, suggesting that not just DEXs could be working on finding a place for the three so-called privacy coins to flourish. In the end, a kind of balancing act may be required on the part of regulators and the crypto community, where the challenge is to preserve the privacy strengths of cryptocurrencies but without making them a haven for money launderers and ransomware criminals. I would expect to see continued efforts to address the risk and to step up KYC/A.M.L. enforcement as the new administration comes in, Massad told Cointelegraph, adding, whether privacy coins can be managed better to satisfy both law enforcement interests and those who like the greater anonymity they provide is an interesting question. I can't say I've seen that yet though. The price of Bitcoin has dropped below $40,000 as several high-cap coins return to the spotlight. Bitcoin, BTC, price has once again dropped below the $40,000 level on January 10 after crisscrossing it for the past 3 days as the spotlight shifted to altcoins, namely Dash, DASH, and Bitcoin Cash, BCH. The BTC price drop comes after another failure to break through resistance at $41,500 in weekend trading. One reason for the drop is likely an uptick in selling by miners. As reported yesterday, the Miners Position Index, MPI, that calculates the ratio of BTC leaving all miner wallets to its one-year moving average has reached levels where miners are selling. Miner position index looks enough to make a local top, commented CryptoQuant CEO, Ki-Young Yu, right before the price dropped. Other reasons are largely technical as BTC gives out coins some time to catch up, and due to sentiment. The Crypto Fear and Greed Index, for example, has remained at dangerously high levels, suggesting that a pullback is likely. In fact, the metric has remained above 90 or extreme greed for 2 months, the longest period in its history. Meanwhile, alt season continues with the bullishness apparently shifting from BTC to Bitcoin Cash in Sunday trading. The latter soared from $420 to as high as $630 in the past 24 hours. The move marks a technical breakout from a multi-year bear market, with BCH/USD now at the highest level since November 2018. However, the biggest gainer over the past 24 hours is Dash, with its price rising roughly 40%. During the short parabolic rally, Dash surged by over 100% from $95 to as high as $194, only to pull back to the $140 level. The move also marks a technical breakout from a multi-year slump, as major altcoins are now following in Ethereum's footsteps from last weekend, which several analysts pointed out as the possible start of alt season. Square's Jack Dorsey hints out at FinCEN's burdensome proposed crypto wallet rules. The burdensome information collection and reporting requirements deprive U.S. companies like Square of the chance to compete on a level playing field, Dorsey said. Hit the like button and subscribe to the channel.